How's it going, everybody? It's Stas here. So the stock market was a bit all over the place today. Very choppy day across the board. S&P 500 up $9, up about 0.3%. The Dow Jones, very strong day, up $357, up 1.3%. And the NASDAQ ended up continuing the sell-off from Friday, down $54, down about 0.5%, as the Russell 2000 went up $15, up about 1%. So a pretty crazy day in the markets today, and in this video we're going to be talking more about the stock market, breaking down some technicals, also going over the main stocks that I'm looking to trade as we're getting deeper into the month of August here in 2020. And as we're slowly wrapping up earnings, we're also going to talk about a bunch of companies here that just reported earnings. So a jam-packed video. If you guys find value, as always, hit that like button for me. Join the Strive Smart Discord chat and Facebook group. Those are free of charge and linked down below in the description box. And you can also get 2 free stocks from Webull valued up to $1,400. Also linked down below. All you have to do is deposit $100 using that link, and you get 2 free stocks. And I also get 2 free stocks. So let's get into the video here, guys, starting off with the S&P 500, the 500 largest publicly traded companies here in the United States. And like I said, we ended up going up $9, up about 0.3%. And overall today, the bulls ended up winning the day, and the bulls took even more charge as we got out of 33.50, which was the main resistance that I was watching for today, as we outlined in yesterday's video on Sunday, right? We talked about how 33.50 is where we failed on Thursday. We failed there on Friday. We saw a triple top despite the rally heading into the close on Friday, right? So we were seeing a big resistance heading into this week, and what do you know? Right in the beginning of the day, we saw a gap up, right? A gap out of 33.50 here on the S&P. That was very bullish. And from there, pretty much, I mean, we saw a pull down, a retest on 33.30. We held it at a higher low. Also, this 180 SMA here on the 5-day, 5-minute chart. We held that at a higher low, confirming the uptrend, and ultimately rallied back out of 33.50, to close off the day, which really, again, solidified the bullish momentum here. So at this point, the fact that we're holding 33.60, I mean, we're only about 30 to 40 points away from all-time highs here on the S&P 500. And if you guys remember, all-time highs were hit back in the middle of February. So I'm thinking right now we're literally a stone's throw away from all-time highs here, and it could really happen this week, right? It can really happen this week, and I wouldn't be surprised if we did get an all-time high this week. So keep an eye on 33.90 on the upside here for the S&P, as we did get that bullish gap up today. And let's say we do see a bit of a sell-off. I mean, hey, let's say we pull up, hit an all-time high, start selling off a couple levels that we could be going down to. Heck, maybe even before we get to an all-time high, I mean, we could maybe pull back down and retest 33.60 again, 33.70. We might pull back down and test 33.30 again like we did earlier today. I mean, these are some of the main levels that I'm watching when it comes down to the S&P. So that is some thoughts there on the S&P 500. Dow Jones today, Dow 30 did very, very well, breaking out of 27,500. Now we are officially at a high, not an all-time high, but a high when it comes down to the past 2 months, 3-ish, 2 to 3-ish months of trading here, right? And I've talked about on the channel how NASDAQ obviously has been at all-time highs, S&P almost there, but the Dow hasn't really gone much when it comes down to the price movement here from the beginning of June. So the fact that we took out that high back from June, that is a very good sign here for the Dow Jones. And if we extend this a little bit to the right, you guys can see, I mean, the next big level we're heading to is going to be around 28,000, 28,200, that general area. That is where the bulls could get us to. And, on top of that, another thing worth noting here is we are a bit oversold. RSI is at 80. RSI, anything above 70, close to 70, and into the 80s. I mean, that is considered very overbought. So, I mean, we could see a pull down here before the Dow does end up getting up to 28,000, 28,200. And in that case, I mean, we might hold. I mean, honestly, looking at it, I from a bullish perspective, I'd love to see the Dow hold 27,500, 27,600. So if we do see some sort of pull down, healthy pull down to bring that RSI down a bit, watch out for 27,500. If that fails to hold, we could be going back down 700-800 points from here to 27,000. That could also hold as a pretty good support. And for the NASDAQ here again, tech was a bit weak today. Friday as well, it was weak. But overall, we're still holding around 11,100, which was that point where we were struggling back in the middle of July, right? We hit a resistance there on July 10th, on July 21st, right? On, you could argue the end of July as well before we gapped out of it. So the fact that we're holding 11K, 11,100, that gives me some hope that this is simply a pull down. We're seeing some consolidation, and the bulls could end up taking over again in the next couple of days. Maybe towards the end of this week, maybe tomorrow or the next day. We'll see what ends up happening. But as long as 11,000 holds, 10,900, this 50 SMA here on the 4-hour chart, this general area, I think the NASDAQ does have some more headway to go. And a lot of people are seeing maybe some rotation here out of these tech stocks. We're seeing some airlines moving today, some restaurant stocks. I haven't checked the hotel stocks, but maybe those are moving as well, as we're seeing kind of the CV impacted stocks moving today. And we'll take a look at those a little bit later on in this video, but that's kind of what we might be seeing here. A little bit of a rotation out of tech, maybe into some beaten down stocks, maybe some stocks in the Dow 30 as well, as we're seeing the Dow outperform today. So let me know your thoughts down below there in the comments. I would love to know. As always, I love talking to you guys, and I try my hardest to respond to every single one of your comments. So before we get into earnings, let's talk about what I personally did today, what I'm involved with right now when it comes down to some individual swing trades that I am in. So one of them is Upwork. This is one that I got in on Friday, right around, I believe, the 1440 range is where I'm in at this point. And we're trading pretty much right around my cost basis. And Upwork is a company that reported earnings a couple days ago. The stock was trading at about 18, 19 bucks at around earnings time, and we pretty much got a massive correction in the stock that I personally think is an overreaction, and I'm looking to capitalize on this sell-off of around 20 to 25, pushing 30%, right? When it was down at about 1380, that was down about 25-30% here for Upwork. So they I think they gave a bit of soft guidance. That at the end of the day might have ended up pushing down the stock, but if we take a look here at earnings, I mean, they beat EPS and revenue by a pretty solid margin. EPS came in at -3 cents versus -9 estimated, and sales came in at $87 million versus $80.3 million. So they beat there on EPS, revenue, stocks dumping. I think it's an overreaction, so I'm building a position here. And quite honestly, this is a longer-term swing for me. So if it goes down to $13.50, $14, I might not sell out, believe it or not. I might even add more at that point, as I do think over the next couple of months, weeks, this will end up recovering and end up yielding some pretty solid gains. So that's Upwork, UPWK. Also still in Netflix here at around $4.95, $4.96, down a decent amount, not a lot, but a little bit here, about 2% on my position, as tech in general, like we said, sold off today. Netflix down about 2.3%, but overall, guys, the uptrend still holding. We're still holding a very key level at around 475. Also, this 180 SMA on the 4-hour chart. So I'm not quite yet sweating it here with my Netflix position, and kind of like Upwork, this is a longer-term swing trade for me. And I'm also in Fastly with a very small position here. That's FSLY. We did see a rebound today. We were trading in the mid-80s at some point in the beginning of the day, but it was pretty much all downhill from there. But one thing to note is we did end up holding about $76 today as a support. We bottomed there on Friday. We held it earlier in the day today at about 11 a.m. Eastern Standard and at about the end of the day as well. And I'm down a pretty good amount on this position. Full transparency, I mean, I'm in at about $91. And yeah, it's trading at about 78. And like I said, I mean, this is a smaller position for me, so I'm not sweating it too much, right? I'm in with a very small goal amount of my goal position. And the truth is, I'm looking kind of like Upwork and Netflix to swing trade this one for a longer period of time. So I might even add more if it does end up holding 75, which again, it was a support from Friday, and it's also a support from back in the beginning towards the middle of July. So I'm watching Fastly to add more, maybe from $75 to $80. Haven't done so quite yet, but I might add more tomorrow at some point, maybe even this week, later on this week. And another stock that I'm still in, we'll get into this one in a minute here when it comes to earnings, is Workhorse. Ticker symbol WKHS, down 7.6% today, and it's holding its pretty big support overall at about 14 to 14.50, right? That's a good sign here for the Workhorse bulls, technically speaking, right? That it's holding $14. This has been a support ever since the beginning of July. It's also the 180 SMA, the support on the simple moving average here on the 4-hour chart as well. So I'm watching for a rally up here back to $16.50 and ultimately a move back to $18. That's where I would probably consider taking some profits. But this one, like all of the swings I'm in, is also one that I consider a longer-term swing trade position, right? And before we get into their earnings, let me know down below in the comments, what are your thoughts on these positions, the markets in general, what you guys did today, what you guys are planning on doing moving forward. I would love to know. Now let's talk about what happened when it comes down to Workhorse here, ticker symbol WKHS. So, needless to say, they did not impress with earnings. I mean, sales came in at $91.94 thousand, so $91,000 versus the $270,000 estimated. And we're not really looking at these numbers, guys, when it comes down to revenue, because they're not selling mass units at this point. But yeah, they missed there when it comes to revenue, $91,000 versus $270,000. And one thing that I love looking at when it comes down to companies like Workhorse, more speculative, companies that aren't really making a lot of money, profits, but they're innovating, they're using a lot of money for R&D and so forth. I like looking at their cash burn, right? How much money are they losing per quarter? And they ended up losing a whopping $131 million, and that was larger than expected. That was their Q2 loss, which is just unbelievable. So, and I think a lot of that was from interest expense, about $128 million of that. If you guys dive deeper into their earnings, you'll be able to see that for yourselves. And we got some news about what they ended up doing with some of their products here. The company received an initial purchase order for 20 C1000 trucks from E-Trucks in July, and also delivered 2 C1000 electric step vans to Ryder System. And Ryder System, for those of you guys that don't know, that's Ryder with a Y. They're an American provider of transportation and supply chain management products, and they're especially known for their fleet and rental trucks. Ryder specializes in fleet management, supply chain management, and dedicated to contracted carriage, right? So that's what they ended up doing when it comes down to some individual products here, to different companies, and they reaffirmed their delivery target of 300 to 400 vehicles for 2020. So they're not moving a crazy amount of vehicles here, but the reason why people are in Workhorse is for the mighty old USPS $6 billion deal, and we just got some news recently that Mahindra, which was one of the four that were competing for this $6 billion contract, they are out. So now it's just Workhorse, Carson, that's with a K, Karsan, and /Oshkosh. And I know /Oshkosh, their vehicles, they're ICE vehicles. They're not electric vehicles. Workhorse is electric, and I believe that Carson, I'm not exactly sure, don't quote me on this because I'm mixing them up a bit, but I believe Carson is a hybrid. So Workhorse is the only 100%, I'm pretty positive on that, electric vehicle out of the people or the companies fighting for this, for the contract. And another thing worth looking at, and do more research into this as well, is I believe it's called the Moving Forward Act, which goes into how $6 billion, again, is the deal. Some of that needs to be allocated towards, zero emissions vehicles, or also known as electric vehicles, meaning that Workhorse could end up getting a nice chunk of it. And that is not set in stone. I believe that's still moving through Congress, but take a look and look deeper into it. The Moving Forward Act, that is, I believe, what it's called. So overall, Workhorse, they didn't do that great, but The big thing is, guys, they're fighting for this USPS contract, and if they get it all, if they get a big chunk of it, right, that is going to be what ends up pushing up the stock. And you buying into this company is you speculating a little bit on that coming true. And with a company like this, another thing worth mentioning is whenever they get financing, right, they just recently got $70 million in financing. I forget when, it was a couple weeks ago. The stock does well typically because this company is running on money from investors, from financing, because, again, they're not making much money and they're burning a lot of money, so they need money continuing to come in. So if they get more financing, that could end up moving up the stock as well. So keep an eye on Workhorse here. It's pretty interesting, and again, I'm in this one as a longer-term play. And another company that reported today was Novavax, NVAX. This is a vaccine company here. They're up 4%, about 5% today, up $8.22. They reported EPS of 30 cents in the negative, so they lost 30 cents versus losing 42 cents estimated, so they beat their revenue, came in at $35.5 million, but that missed the $39.58 million estimated. So this is trading close to all-time highs. $20 off all-time highs, so there could be potential there, and I'm watching it if it does maintain this uptrend here, which it is, but I'm not looking to really jam money into it quite yet, as honestly, I personally see other opportunities that are greater than Novavax, but still figured to mention that they reported here. And Sunrun, RUN is the ticker. They also, I believe, reported, although here we can see they just reported they had a loss of $13.6 million when it comes to the second quarter. They had revenue of $181 million, and they had a EPS of negative 11 cents. So negative 11 cents EPS. Revenue came in at $181 million here for Sunrun, and when we're taking a look at the stock, it's not really budging at this point. It's selling off a little bit after hours here. It's down about $2 off, or $2 to $3, honestly, off the highs here at about 48.30. So we'll see what ends up happening here. If the uptrend continues, Sunrun could be a very good play. And quite honestly, we called this one out, I believe, not this Sunday's video, but the previous Sunday when it was at that pretty nice dip here at about $36. We called it out, and the move has been made, quite honestly. And it moved from $36 to $48. Not saying it can't go higher, but I'm looking more for a pull down at this point before getting in again, and maybe around $42 to $43 could be a point where Sunrun does end up, becoming more attractive if it does get to that point. And another company that I think did not end up reporting today, they were supposed to report, was Tencent, ticker symbol TC actually, EHY. This is a stock that I always mess up their ticker symbol. This is a Chinese company, and let's see, I think they pushed their earnings back to the 12th of August, so not much to go over when it comes to Tencent, since again they didn't report earnings, but they are trading about $8 to $9 off their highs. Recently, the stock's down about $10 literally in the past 2-3 trading days, so this one could very well be a good swing trade to get into, but there is risk involving Tencent. It's a Chinese company. Do more research, guys. Do more research. Dig deeper into it. If you're not comfortable investing in the Chinese market, I'd be careful with this one, but still, it's worth watching for those interested. So those are the main earnings, although Tencent did not report earnings today, but those are the main ones that I wanted to go over in this video. Let me know down below in the comments, what are your thoughts? Now let's go over a bunch of stocks here that I'm looking at with a beam, binoculars, guys. I'm looking at these like a hawk, and I'm looking and eyeing up my entry point. And we got some amazing news from the transportation stocks recently that sent them up like crazy. FedEx up 9% today, up $16, almost above $200, 2 cents shy of cracking above $200 at the close today, although it did hit $200.46 earlier. This has gone up because freight giants said that they are lifting their holiday prices to offset higher costs from increased deliveries during the CV pandemic. They're also lifting international fees on routes affected by reduced commercial flights caused by the CV travel restrictions. That was FedEx. So that ended up shooting the stock up on Friday. It led into today, again up 9% today. And despite this massive rally that FedEx has had, right, it's gone from $88 up to where it is now, $200. I mean, we've been calling this one out since 160, right? So ever since 160, 170, we've seen this massive rally. And despite that, I mean, it's still trading. If we take a look here on the yearly chart, and actually, no, we have to go to the 3-year chart to see it. I mean, we're still trading about $70, $75 to be exact, off of the all-time high. So this could still have some legway to go. I mean, we might see a pull down, maybe down to 185, 190. If 200 breaks, maybe 200 holds, we consolidate there for a couple of weeks. But ultimately, I mean, I see potential up to 210. A big level also coming up is 217 to about, $220. So from this point, I mean, we could see another 10, 15% move to the upside. Although it did double from the March lows, there's still some upside here. So I'm interested, and on top of that, there's a lot of buy targets here and price increases from analysts. So, I'm interested in building a position here in FedEx. And another one is UPS, another transportation stock. This one has been on fire ever since they reported earnings, I believe 2-3 weeks ago. Yeah, they reported earnings on the 30th, so more like about 10 days ago. And ever since then, I mean, the stock's gone from $120 up to $160. And according to Bloomberg, UPS plans to add a holiday surcharge of up to $4 per package for customers who ship more than 25,000 parcels a week and whose busy season volume is 3 times their February level. Meanwhile, the firm has flagged a $1 holiday levy for ground deliveries with volume at least 10% above February's level. The price hikes dwarf the company's last surcharge increase, which was back in 2018, that maxed out at 99 cents extra per package. So a massive increase there when it comes to that, from 99 cents up to $4 here for that surcharge. And that's good at the end of the day. These companies are going to be making more money in profit, more money on the top line in general during those periods. And for UPS, I mean, it's not as attractive, I'd say, as FedEx, but any dip in this stock has to be taken seriously. I mean, if we take a bigger dip here, maybe down to 150, maybe down to 145, 140, 135 even. That's going to be a very interesting entry, a potential entry for UPS. And as always, guys, you must do your own due diligence, do your own research. Don't buy anything based on my opinion. Always buy based on your opinion. Understand the risk involved, and just understand, guys, that you must do your own research. That's the bottom line. And another company here is Microsoft. MSFT, they got some selling today, down 2%, as Twitter is in the talks of buying TikTok. They're looking to get in the mix here. I'm not exactly sure. I don't think they'll be able to pull it off, quite honestly. If an American company is going to buy TikTok, it's going to be Microsoft, but we're seeing that a bit here. We're seeing some weakness on that news, down about 2% today, down $4.23, down about $9 off the all-time high at around 217. And quite honestly, guys, this could be a dip buy on Microsoft, right? This could very well be a dip buy, and let me tell you on what conditions. If it holds 205, I think it will. That could be a reason to buy into Microsoft. Another reason could be if it holds 206, which it did today, and it bounces into the 210 territory, which would confirm the 180 SMA hold here on the 4-hour chart, which has proven to be where Microsoft has bounced on over these past couple of months, right? Every time Microsoft has seen a pull down, it's cooled off a bit, it's dropped, it's held this gold 180 SMA, and that's where we're trading at right now. So I'm thinking if 208 holds, we take out 210 here, which is a resistance from back in the end of July. I mean, that is where we could start to get some headway back up to 215 to 217. So at this point, I like Microsoft. I might give it a day or two to consolidate a bit, see what ends up happening. But overall, from 210 up to 217, we could be getting to 220 on this stock. I'm liking it. So Ulta is another one, ULTA, which saw some potential rotation into the stock today. Like we said earlier, we saw tech drop. Maybe people are buying up stocks like Ulta, restaurants, hotels, airlines. Ulta was up 7.5% today, up $15, breaking out of 210. That was a big resistance. And now we're looking to take out 220. And let me tell you guys, if 220 ends up breaking, we're going to be in levels and territory that we haven't been in pretty much since the middle of June. So that's going to be a big psychological break, a technical break here on Ulta. And from there, we could be seeing finally a move up to 250. But let's not get ahead of ourselves, guys. I mean, we are overbought. Earnings are coming up, so that could end up fluctuating the stock. Earnings at the end of August. And we might honestly break 220. And we might end up seeing some consolidation. I wouldn't be surprised if Ulta cools down, but then again, it's beaten down so much, we might not even see a cool down period. So this one is just worth keeping a very list here. We could be seeing a rally overall in Ulta in these coming days. Same exact thing here with Snapchat. I mean, Snapchat's down about $6 off, or more like $5 off the all-time highs here at around $27. And we're moving averages, these resistances here on the 4-hour chart, both the 50 and the 180 SMA. I'm thinking once those break, that's going to be the confirmation that this thing is heading back up. And one of the main levels here that I'd love to see break and hold for Snapchat is going to be around $22. I mean, $22 is where we held as a support in the end of June. It's a key level when it comes to this 50 SMA here, and I think if we take that out, we might start filling up to $23, and then when we get to $23, that's going to be another interesting breakout spot, big resistance for Snapchat, and if we take that out, that is where we might start to get more headway in the stock, maybe back up to those levels, $24, $25, maybe even $26. And Snapchat, from what I remember, I mean, they did report a pretty solid earnings report, and the stock is just getting crushed. So this could be an interesting one moving forward. That's Snapchat, SNAP. Virgin Galactic is showing some signs of life at $19, up 5% today, up 98 cents. And this is a good sign, guys. This is a good sign that we are starting to get some buyers here. Volume, though, has died down in this stock. I mean, you guys can see peak volume recently was back in the end of July here. But overall, I mean, the fact that buyers are coming in 1950, which was an old resistance from back really, from March all the way up to about July, the fact that buyers are coming in there, that is a good sign, but we need to see a full-on break out of these moving averages, and in my opinion, out of $20, $21. Once we get out of those big psychological spots, that is where I think Virgin could start to get back up. And if you guys don't recall, I mean, Virgin Airways, they went bankrupt. A lot that put pressure on Virgin Galactic here. They had a share offering, of about 23.6 million shares at $19.50. So that could be another reason why we're seeing it hold the $19.50 level. So we'll see here what ends up happening. I think there's potential. I'd leave it to do its thing a little bit, see what happens. But if we get out of 2021, this could be on its way back up. And Upwork is another one on my list. I mean, we already talked about it, but if it holds, again, $15, starts to get up into 16, 17, that is where I think there's a lot of breakout potential on this one. And Cake, guys, CAKE, Cheesecake Factory, although it only went up 2% today, not too crazy of a day, we are approaching a pretty big resistance at $27, which we got rejected at back in the middle of June, back in the end of July. So I'm thinking if 27 could break, we get more rotation into restaurants, more hype around a vaccine or whatever, which would shoot up stocks like this, in my opinion. I think Cake could end up going from 27 up to 30, which is back where it was in the beginning of June. So watch Cheesecake Factory here. I'm liking this one a lot. And some ETFs, guys, that I've been trading, that I've honestly haven't been trading, I've been buying in my retirement accounts, are IJR. IJR is a Russell 2000. It's a small cap ETF here. I like this one for some, small cap exposure. Its expense ratio, I believe, is 0.06%. Very minimal. It's pretty much nothing, right? That's $6 for every $1,000 that you have invested. So it's not much at all to have this thing managed. And honestly, guys, small caps at this point, I think they're worth considering, because if you think America is going to get a vaccine, get back to normal, recover, right? Small caps, and a lot of them have been beaten up a lot. I mean, they're going to recover the fastest, right? That is what we see typically from recoveries, and just having some exposure there in small caps. Individual stocks. I don't really own too many individual small caps, if any, right? But having an ETF exposure, I think, is great, and IJR is one of those. And some gold ETFs. I love gold ETFs. GDX is one I was watching today. It was up earlier in the day, but now it ended up going down about 1%. And the lower it gets, guys, the better for me. I mean, I think if it gets down to $39, $40, I'm definitely going to load the boat on GDX there. And GDXJ is another one. GDXJ is a junior miners ETF, down about 0.5% today, about $5 off the highs here, so that could be a dip buy. GLD is a gold ETF that's more, it's more just tracking the price of gold. It's not a gold miners ETF. It just strictly tracks the price of gold. And don't forget about silver. Silver has been crushing it. I mean, silver, a main ETF I like to watch is SLV. This tracks the price of silver. And taking a look at silver itself, I mean, we were up 6% today on the price of silver. It's gone from $11 back in the middle of March all the way up to almost $30 where it is now. That's a 3x move. So I'm watching gold, silver, small caps here. I think they are very interesting plays. So overall, guys, that is it for this video. And actually, wait a second. I almost forgot. DAL, some airlines, they're worth watching as well. DAL up 8%. AAL up 7%, right? Although I'm not rushing into these stocks, right? They're breaking some big resistances, so they're worth watching, right? AL breaking $13, which it's failed to do that for other than this move here, in June. It's failed to break out of $13 ever since the beginning of April. So just keep an eye on some of these plays. Win Resorts is another one that could end up moving. It was up 10% today. So watch some of these, and I'll leave it at that. I mean, again, if you guys found value in the video, as always, hit that like button for me. Join our free Discord chat, the Strive Smart Discord chat. That's linked down below. Same thing with the Facebook group. And don't forget to claim your 2 free stocks as well. Those are valued up to $1,400 on Webull. Simply use my link, deposit $100. You get 2 free stocks, and I get 2 free stocks since it is an affiliate link, and it does help support me and all the free content that I'm putting up here on YouTube. So I'll catch you all in the next video. I appreciate all of you guys watching, tuning in. It means a lot to me. Stay safe out there. As always, peace out. How's it going, everybody? It's Stas here. So the stock market was a bit all over the place today. Very choppy day